Thanks so much. Okay. Good morning, everyone. My name is Michael Shaulov. I'm the CEO and co-founder of Fireblocks. And today I'm basically going to talk a bit what we are seeing in terms of this space, the crypto space, coming into mainstream adoption. So quickly, for those who are unfamiliar with Fireblocks, we basically are the leading infrastructure provider for the institutional and B2B space in crypto and digital assets. What we do is we provide the entire custody layer. We have the Fireblocks network that connects pretty much every participant in the market, and we are also supporting a lot of companies in terms of their tokenization and the ability to bring assets on-chain in this space and interact with DeFi protocols. We're powering more than 2,200 institutions, so that's basically the vast majority of the players in the space. $10 trillion in volume since inception, and last year we were now actually like on the pace of doing 4 trillion this year. And though we support 100 plus blockchains, Solana is definitely one of our most favorable ones, and I'm going to talk quite a lot about what we're doing with them and how they're supporting this mainstream adoption. So, as I said, we're basically working with quite a lot of different market participants, supporting them in terms of custody and treasury management, payments, and so on, exchanges, asset managers, brokers, and neobanks, payment service providers that are all entering the space, a lot of the market makers and banks, and also enterprises. And probably the most interesting thing is that we are seeing these categories evolving and starting to adopt more and more the digital asset rails. We also process somewhere between 10 to 15% of all the on-chain transactions that are going across the main protocols and the various assets that are hitting our wallets or being sent off our wallets. So we have a lot of stats in terms of what's going on in the space, who's doing what, and what are the specific trends in terms of the usage that we are seeing. And that's why I'm going to spend the next 10 minutes. So the first thing that I would say is that clearly with regard to investment in crypto assets, we're basically already seeing the scale, right? So the number of institutions, right? There are now over 3,300 institutions that are basically investing in Bitcoin directly or indirectly through the Bitcoin ETF. And we've seen extremely significant inflows, right, into this asset class. So about $61 billion basically came into the BlackRock Bitcoin ETFs that was launched, like a year and a half ago. And that AUM continues to clearly rise. But maybe the most important thing is that now beyond the adoption of investing in Bitcoin and investing in crypto, we're basically seeing the real utility starting to come up into the mainstream. And the first thing is really the adoption of stablecoins, right? So the stablecoin market cap basically recently moved to about $230 billion. And that's basically from 4 billion to 230 billion since 2020. And stablecoins is starting to become the real killer app. Last year, about $30 trillion of stablecoin transactions were processed, which is more than Visa and MasterCard combined. So this is sort of like, becoming a well-known and adoption capability among a lot of the market participants, and that's basically the wave that is currently coming through the adoption. And just behind that wave, we're basically seeing tokenization of financial assets through tokenized securities and other things that are coming into on-chain that they are riding just behind the stablecoin adoption. So why is that actually happening now? Clearly, there was just organic adoption of all those capabilities, but what is actually making and pushing the space forward, at least on the institutional side, are the regulatory milestones that we were able to achieve since the beginning of 2025, since the new administration went to office. And the first one was basically the repeal of the Sub 121 directive from the SEC, which basically allows any public company, and specifically the publicly traded Wall Street banks, to engage with custody and basically bring assets, crypto assets, on their balance sheet and interact with public blockchains. The SEC Crypto Task Force is currently working on a lot of interesting legislative aspects around custody and staking and market structure. We've seen the stablecoin bill, which is the Genius Act, coming through the process in the Senate and Congress that is maybe like the most impactful thing that gives people assurance that this is not going to be rolled back by the next administration. And we're seeing pro-crypto leadership that is able to give guidance and understand what the space is doing, what's the value proposition of those new rails, the new technology that we are building, and essentially give comfort, give guidance to the different market participants, how they can engage, how they can interact with the space, how they can adopt the technology. And that's probably like the most important thing that is happening right now, and that's what drives the space forward. So shifting to stable coins, that's clearly becoming the killer use case in terms of mass adoption. What you see over here on this chart is essentially the volume of stable coins against any other crypto that is going through Fireblocks. So back in 2021, it was about 30%. Now, every month, it is above 50%. The traffic that we're seeing is either USDT, USDC, or some of the newer stable coins like Agora and so on that are coming in the market. And while originally we were seeing adoption that was mostly around how do I use that as a settlement mechanism for crypto trading, more and more is being shifted into using it for payments and other use cases. So, stablecoin is clearly the most popular on-chain RWA asset. I think this is well known. And, maybe the most interesting thing is that we've recently run a survey at around 300 institutions that included banks, payment service providers, and so on. And 90% of those institutions are either already adopted stablecoin, in pilots of adopting stablecoins, or they are contemplating how to do it in the next 12 months. Now, I think a big reason for that is, first of all, the regulatory aspects that I talked about previously, but it's also the fact that they feel, and this actually comes in the survey, they feel that the infrastructure is ready, that we have blockchains like Solana that are able to provide the speed in terms of a rail that is equivalent to what we are seeing in the traditional space, right? So this argument is that it's too slow, it's too clunky, it's too expensive, is gone. And you have platforms like Fireblocks that are able to support the transactional aspect at scale with the right level of security and compliance that those people need. So on the back of it, we're basically seeing not only the payment service providers coming in, but also the banks. In the last, I would say, between 2021 to 2020, end of 2024, we've seen very minimal interaction or interest from US banks to come and explore this space. And now we are seeing a huge rise, basically exponential rise of banks that are coming to learn what they can do. And that's predominantly is around how do I allow my customers to interact with crypto and buy, sell, hold. But most importantly, they're trying to figure out how they're going to use stable coins or tokenized deposits to do cross-border transfers. So this is a bit of a snapshot of what we are seeing in terms of payment service providers or payment companies, both new ones, like basically startups and fintechs that are starting right now that are built from the ground up to do stable coins, and also traditional payment providers like Visa, WorldPay, and others that are basically coming to Fireblocks for the infrastructure to start using stablecoins. And you can see basically the breakdown, and the most common use case is basically business-to-business cross-border transfers, but also we're seeing quite a lot of remittance use cases. So the cross-border corridor is the most important one, and actually what you're seeing here is basically the chart of the volumes that they are pushing through per month through our platform, and we are seeing between 30 to 40% growth quarter over quarter. So the next wave that basically comes behind the stable coins is really the tokenized RWAs. It's not surprising because the idea of tokenized RWAs clearly existed from maybe the beginning of the programmability that was available on crypto rails, but actually there was very little adoption up until recently. The main reason is that actually RWAs, and specifically tokenization of various securities, whether those are bonds, money market funds, and equities, becomes much more interesting when you already have an on-chain settlement capability that is stablecoin. And clearly, the stablecoin is also the main driver because, as you probably know, the main business model of the stablecoin issuers is that they are making money on the float, or basically they're making money on the reserve, the interest rates. But if you're a holder of a stablecoin, you actually want to continue and invest it on chain. And as a user of a stablecoin, you want to capture that by yourself. So for that, the money market funds and various other tokenized investment instruments become very useful. And that's what we're seeing right now happening. So this is basically the kind of the trend, the chart that shows the trend of the adoption and the assets under management of various tokenized money market funds, which is effectively US Treasuries. And you can see 183% increase from the beginning of the year, basically post-election. Not surprisingly, the biggest winners over here are some of the most reputable firms, like Biddle, that is being issued by BlackRock, securitized, and we are underpinning it from a key management standpoint. That's being adopted by the various players across treasury, holding, investment, and collateral use cases. So just to sort of wrap it up in terms of what we're seeing as the next adoption that brings the crypto rails, digital assets into the early majority and the late majority, there are a few clear use cases. The first one for stablecoins is really the fact that people hold stablecoins in various volatile economies like Latin America, where they have a high inflation, Turkey, and so on. There are companies like DollarApp, CipherCash, BTC Turk, and so on that we are proud of powering that are using this to really give stability to the local population. We're seeing acceptance of payments in various markets. So, for example, Bridge, that we were proud to power and provide them part of our infrastructure, they're powering collections for Starlink in Latin America. We're seeing a lot of usage around B2B cross-border payments. So basically the ability for enterprises and merchants and to move money around the world at a split of a second and a much lower cost than was previously possible. So they're basically disintermediating SWIFT and the corresponding banking system to be able to do it much faster and much cheaper. There are companies like Conduit and many others that are taking advantage of it and bringing this revolution into the market. And last but not least, on the tokenization side, we're clearly seeing a large adoption of tokenization around various players that are, first of all, doing stable coins on other pairs, basically FX around stable coins, and also tokenizing other instruments like bonds, equities, and so on, like Kraken and ABN AMRO and so on, that are basically bringing new assets into the blockchain. So those are some of the use cases that we were seeing. And clearly, a lot of it is possible because of the new generation of the rails that are giving the speed, the programmability, the security, the extensions that are capable, the compliance capabilities that are giving peace of mind for the new players to interact with those assets in a regulated way. And we are super excited about our partnership across all of those accounts with Solana. We're powering, together with them, a lot of the flow, a lot of the transactions with them. We're bringing tokenization to Solana, and clearly, from a payment standpoint, USDC on Solana and USDT on Solana became very prevalent instruments that are going through our network. So for that, thank you so much. If you have any questions,